We got some great news for Salesforce stock investors as the company announced during an investor conference that they expect their revenue to achieve a level more than $60 billion in 2030. That's great news for Salesforce stock investors because revenue growth is one of the main concerns with stock market analysts evaluating this company. So I'm going to share with you this detail and what it could mean for Salesforce stock investors and update my buy or sell rating on this business and share with you my fair value calculation.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So during an investor conference, Salesforce said they expect revenue of more than $60 billion in 2030. This was according to a presentation made at its Dreamforce event on Wednesday. Shares of Salesforce stock are up by nearly 4% in the aftermarket hours following this announcement. So I've had Salesforce stock rated as a buy all year long. I'm happy to see this news and I'm happy to see the share price increasing. Of course, Salesforce in its most recent trailing 12-month period generated revenue of $39.5 billion. So if the company achieves more than $60 billion in revenue by 2030, that would be an increase of more than 50% over these next several years. So that's encouraging to stock market investors who are concerned about Salesforce's ability to generate revenue growth amid rising competition from companies that are using artificial intelligence to provide customer relationship management services. Investors have been less than impressed from Salesforce's investments in AI, and they've been wanting the company to make more progress, develop more innovation in order to compete in this rapidly changing environment. So Salesforce revenue is likely to go to 60 billion, but where's cash flow going to go? So to estimate that, I wanted to look at the company's cash flow to sales ratio going all the way back to 2005. And while this figure has been volatile, the company has generated at least 20% in cash flow from operations to sales. And that 20% number is a rarity. More often than not, the company is closer to 25%. And in the most recent 3-year period, they've been closer to 30, 34%, and 33%. So it's reasonable to assume that the company's operating cash flow to sales ratio will be roughly 25 to 35% in 2030 when the company does generate that $30 billion in revenue. So that makes my estimate for the company's free cash flow expectations in 2030 of roughly $21.4 billion reasonable, given that they will generate $60 billion in revenue. 21 billion in cash flow would be roughly 33% of that. It's a little bit I would say above the historical trends, but if you look at the company's recent operating cash flow to sales ratio above the 30% levels, and if you remember that in 2022, Salesforce undertook a major cost-cutting regime and really focused on costs, and they actually fired thousands of people, tens of thousands of people. They let them go, and the company has been more profitable ever since those layoffs. Since the company is utilizing artificial intelligence for a lot of its own internal use cases, it's also reasonable to assume that the company can achieve this revenue growth without spending too much money on new individuals in order to fulfill that revenue growth. So all that being said, the cash flow estimates for 2030 of 21.4 billion, I think I'm more likely to revise these upwards rather than revise these lower, given the company's more than $60 billion revenue forecast for 2030. So discounting those cash flows back to today, the intrinsic value per share I calculated for Salesforce stock is over $339, and the current market price is a little over $236. Of course, if you account for the after hours market action, the price is closer to $250, but it's still well below my intrinsic value per share calculation, reiterating my belief that this stock is an undervalued growth stock. So I will reiterate my buy rating for Salesforce stock. I've had it rated as a buy, I believe, all year long here in 2025, and I reiterated that buy rating today following this announcement from their conference with Wall Street analysts. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.